Good afternoon, and welcome to the webinar on Nebraska's Economic Outlook, which is being presented by the Bureau of Business Research here at the College of Business Administration at the University of Nebraska-Lincoln. Let me first of all say season's greetings and a happy new year to all of you. We are going to be conducting our webinar today looking at Nebraska's economic outlook over the next 3 years. This outlook is developed jointly by the UNL Bureau of Business Research and the Nebraska Business Forecast Council, which is a group of university, private sector, and also some state employees who get together twice a year and develop a 3-year economic outlook for the state of Nebraska. So I'm very pleased to provide to you our December economic outlook, which will cover, of course, what's going to happen next year in 2018, but also provides an economic outlook for the year 2019. And then the first time we're also producing an economic outlook for the year 2020. I'm going to make a PowerPoint presentation which will cover kind of the main points and concepts in our economic outlook, as well as, of course, the specific numbers. And the other part of our webinar today, I'll point out some other features. We do have a chat window, which provides you an opportunity to chat with the other webinar participants as you see fit. And we also have a question and answer window. So you have an opportunity at any point during the webinar or at the end of the PowerPoint presentation to type in some questions you would like me to answer, and I will be answering questions after the PowerPoint presentation is complete. Another feature of our webinars is we do ask 2 poll questions of webinar participants to get your thoughts and expectations about the Nebraska economic outlook. And we'll do that as the presentation proceeds. And then once we get everyone's votes or answers to the poll questions, we'll go ahead and reveal some additional information, or I guess the answer, a little later in the webinar. So with those points made, let's go ahead and proceed with our presentation on the Nebraska economic outlook. I should mention that my name is Eric Thompson. I'm the director of the Bureau of Business Research, as well as an associate professor of economics here at UNL. First, just a brief outline. Before I can talk about the Nebraska economic outlook or forecast, I should start with a U.S. economic forecast. So Nebraska has a unique economy, as we know, with a strong emphasis on agricultural production and related industries, with a strong emphasis on transportation and logistics, and with a large insurance carrier industry. So we do have a unique aspects to our economy. However, it's certainly also true that Nebraska economy is very embedded and connected to the national and global economy. So I can't really give an outlook for the state of Nebraska without first talking about what our U.S. economic outlook is. Once that's done, we'll go ahead and talk about the particulars of the Nebraska economic forecast. So in terms of U.S. economic forecast, this is how we, those of you who participated in our webinar before, this is how we like to break it down, talk about the strengths for the U.S. economy, the weaknesses facing the U.S. economy, and the bottom line, where we think we are at in terms of the U.S. economic outlook for the next 3 years. The list of strengths has been getting a little longer recently. So it's been true for several years, but I'll point out again, we now have a self-sustaining economic recovery, where the economy is pulling itself along, not being pulled along by the Fed or the federal government or by Fed policy, but it's a private sector self-sustaining recovery. As has been true for several years, we have growth in real wages, which is driving real growth in consumer spending. And we also have positive housing investment, which is benefiting the economy. I think what's new over the last 6 months or the last year is we have significant improvement in business investment. That's also a key private sector driver of a self-sustaining economic recovery. So that's a new positive or strength we have for the U.S. economy. I think it's also become increasingly true this year that we have improved economies in Europe especially, but also in Asia. And that's obviously a positive for the U.S. economy because those continents are our key trading partners. So that's creating additional opportunities for exporting for the United States. Some of the key prices in the economy remain quite low. That's a big positive for the economy. So we continue to have low oil prices, which means low gasoline prices, which is key for industry and for families. We also have historically low interest rates still. We think both these low prices will continue through the forecast period, and that creates positive strengths for economic growth. Lastly, in the last year, we've had movements towards and discussions about deregulation, which tends to be helpful for the economy. Deregulation in terms of the environment, the financial sector, and labor market. And we also have prospects for tax reforms, as well as just some outright tax cuts at the federal level. The reforms in particular, closing loopholes, lowering tax rates is very positive for economic growth. And tax cuts can also be positive too, although when they're not matched with spending cuts, the strength of the impact of tax cuts is a little more uncertain. Okay, in terms of weaknesses, we do have some remaining weaknesses for the U.S. economy, and perhaps some new weaknesses that are potentially going to be introduced. In terms of ongoing issues, the aging of the U.S. workforce continues to affect the economy. Slow growth in the labor force because so many baby boom age people are retiring. And you have a lot of, higher income, higher wage people retiring at the end of their career. And even to the extent that they're replaced by new younger workers, those younger workers tend to be at the lower wage part of their career. So it does impact the growth of the labor force and also the total wage earnings in the economy. We do have some ongoing challenges with workforce quality in the economy. That's partly skills gaps related to having enough workers with STEM skills, science, technology, engineering, and mathematics. And of course, that includes computer science as well. And there also is a skills gap in terms of a lack of skilled production workers for manufacturing, construction, and so forth. So these things do tend to limit the potential economic growth. Another issue that many industries are facing are with workforce quality, job applicants who are not appealing due to too much job hopping or evidence in the resume of difficulty getting along at work. And in some cases, applicants that just can't pass background checks. So obviously those things can limit labor force and economic growth as well. There's also some, newer public policy issues that might be exacerbating these two problems. There's been some discussion of restrictions to legal immigration into the United States. Obviously, if that were to occur, that could compound and aggravate our already existing issues with a slow-growing labor force and influence in a negative way U.S. economic growth. If there's trade restrictions that are introduced, that obviously also would be negative for economic growth, or at least obvious from an economist's perspective in terms of growth and the standard of living. Lastly, in terms of potential weaknesses, there's no current plans to reform entitlements, the major entitlement programs of Social Security and Medicare, and a sort of uncertainty about the actuarial soundness of those programs, I think, creates some uncertainty in the economy, which is a negative for confidence and economic growth. So there's a few weaknesses out there as well, but a lot new strengths. I guess the bottom line is we should see some improvement in economic growth this year and over the next few years. And our group is assuming that we'll mostly get the pro-growth policies, so the deregulation and the tax reform / tax cuts will go through. Perhaps not as much actual change in terms of legal immigration and changes to free trade. So with that said, then we think GDP growth can improve in the U.S. over the next 3 years, closer to 3% than 2 to 2.5%. Now, this may not translate into a big acceleration in job growth because, again, those issues related that are limiting labor supply growth that we discussed in the last slide, but an improving economic outlook overall. So that kind of says the speed limit set by the U.S. economy is going up a little bit. So with that higher speed limit, perhaps there's some room for the Nebraska economy to grow a little more quickly. In fact, we'll show some evidence later suggesting we will have a little bit faster growth in the Nebraska economy over the next few years. But before we get into all that detail, let's look at what's going on in some of the key industries in Nebraska. What's the potential for growth in our largest sectors? These are the agricultural production complex. That's farming, ranching, and related industries such as co-ops and manufacturers who build farm implements. Those are key suppliers, as well as key processors, meat processing plants, transportation businesses that haul livestock and crops around our state or to other states. Another key industry for Nebraska is transportation. We have about twice the employment in the transportation sector as you would expect given the population of our state. So that's a key industry for our state economy as well. And of course, we have a traditional strength in the insurance carriers business here in Nebraska. So let's check in on our three largest key industries and see how they're doing. Now, before we do that, we're going to talk about agriculture first, but down the road, we'll talk a little bit about the outlook for the transportation sector and the insurance sector. So that's our first poll question. Which key industry do you think will have a stronger economic outlook over the next few years? The transportation sector, rail and trucking primarily, or insurance, which includes insurance carriers, but also your I guess, retail level insurance agents and insurance shops as well. So go ahead and place your vote when you'd like. In the meantime, I'll talk a little bit about the outlook for agriculture, and then we'll get information on transportation and insurance just a little bit later. Let's start with the long-term outlook for agriculture. So obviously, we've had some issues in agriculture lately, significant drops in commodity prices that creates some short-term issues. We definitely need to talk about that. But I think it's always important when talking about the short-term outlook for agriculture to also talk about the long-term outlook, which I think is positive, very positive for Nebraska for at least two reasons. First of all, we have a production cluster in our state. We're not just strong at producing crops or livestock or ethanol. We're strong at all of, or the processing of agricultural goods. We're strong at all of these things. So we have a production cluster of interrelated industries. And as always, as is usually true with those production clusters, whether you're talking about the Silicon Valley in California or the motor vehicle production cluster in Michigan, having those related industries co-located creates some cost advantages that are beneficial for the industry, that help the industry grow in that location and attract new investment. And so I think Nebraska is like that when it comes to agricultural production. We're just a very attractive place to invest and to grow because of that production cluster we have in the state. The other big advantage we have is the aquifer. We have the largest part of the Ogallala Aquifer. We have the healthiest part of the Ogallala Aquifer. Our part of the aquifer has not been dropping rapidly as has been seen in Kansas, Oklahoma, Texas, some other parts of the aquifer. So that means we have a bright future in our state with irrigated agriculture, irrigated crop production. We've had to make a few cutbacks here and there as required to protect stream flows. But by and large, irrigated agriculture is a big part of our crop production in the state. And what that means for a potential investor in the agricultural production complex is that you can always count on having a pretty good crop in Nebraska, whether it's drought, whether there's good rain in a year. We're going to have a lot of crop output in our state. And that means if you're locating an ethanol plant, if you're locating livestock, if you're locating a plant that's going to be slaughtering livestock, Nebraska is a good place to make an investment because that crop will come in locally and you won't have to bear the cost of importing a lot of grains from other parts of the country when there is a drought year. That's a tremendous amount of safety and predictability for agricultural processors and a big advantage that our state has in agriculture over the long run. But let's talk about the short run too. There are short run challenges. Agricultural commodities fell a lot since their peak levels in 2011 and 2013. Crop prices have fallen. In 2016, livestock prices fell a lot. We're not expecting those prices to rise, but at least they've stabilized in their current range. There's also some challenges in terms of federal support for agricultural producers, particularly farmers. Part of the crop insurance program, the agricultural support system, is based on a rolling average of past prices. So in recent years, that rolling average of past prices included those very high prices from the year 2013 for crops. Going forward, that rolling average is really just going to include the last few years when crop prices had normalized, come down from their high levels. And that means then that the benefit payments are going to be significantly lower over the next few years. So there will be fewer federal payments for Nebraska farmers, and that'll affect the industry as well. However, things have stabilized. We think farmers, through their ingenuity, being efficient in terms of costs, being efficient in terms of finding new revenues, will be able to modestly expand farm income in this challenging but now stable price environment. So here's our outlook for farm income for Nebraska. We believe it's gone up slightly in 2007 and will rise again modestly in 2018, with a little more growth in 2019 and then stability for 2020. So even though our expectation is for crop prices to stay at the current level, we do think farm income can grow slowly due to the entrepreneurial skill of our farmers and ranchers. Okay, we're about to talk about the outlook for transportation insurance, and I see that among the poll respondents, it's pretty split, with about half thinking the outlook will be stronger for transportation and half thinking the outlook will be stronger for insurance. So let's go ahead and see what we find. Well, for transportation, I'd say the outlook is kind of a mixed bag. Nebraska retains its traditional advantages. A strong ag sector, which obviously demands a lot of transportation activity, both hauling goods around, crops and livestock around the state, but also hauling them out of state. We do have Interstate 80, which is the preferred east-west route in a lot of ways. There's been a lot of growth in traffic in Interstate 80. We expect that to continue. We also have a very skilled workforce, a lot of people with experience in long-haul trucking, and a lot of entrepreneurship with a lot of course, two major trucking companies, but also a lot of smaller and mid-sized trucking companies that are very successful. Nebraskans really have a genius for entrepreneurship in the trucking industry, which is helpful to us. However, there are some disadvantages. For the rail sector, the ongoing decline of coal burning in electric utilities around the country, around the Midwest and around the country, is affecting our rail industry. Nebraska in some ways is actually a coal state, not because we mine coal in Nebraska, but because we haul coal from Wyoming to other areas in the Midwest with our rail industry. And as coal burning grows very slowly or declines at those utilities, that's going to mean a decline, some decline in the rail sector, or certainly a lot of pressure on the rail sector going forward. For trucking, we have ongoing issues with labor shortages, part of that skills gap that I mentioned earlier. And in the long run, of course, automation, will there be driverless trucks and so forth? So I think it's kind of a mixed bag for transportation. Here is our specific outlook. You can see from this graph that in 2017, we had 51,900 jobs, we think, all said and done, when the final state employment numbers are done and prepared and available from the U.S. Department of Labor. And we think by 2020, we can increase about 500 jobs to 52,400 jobs in transportation. There's also a small private sector utility component to that industry. So not a lot of growth in transportation. Now for insurance, we think the outlook is a little stronger. So we continue to have, in terms of insurance carriers, a highly qualified workforce in the state, a lot of people with experience working in the insurance industry who know how to do that kind of work. We have some great workforce training programs. I'll put a plug in for the actuarial science program here at the University of Nebraska. And that program gets a lot of key employees that are important in the insurance industry ready for work. So that's an advantage for the industry. And it's been a big industry in our state, insurance carriers, for many decades. And so the public policies in the state have been molded somewhat to be beneficial to that sector, as you would expect in any state. Of course, there might be room for further improvement in that regard, but it's a good environment here in Nebraska for the insurance carrier industry. And of course, there's also kind of the retail part of insurance. Besides just the carriers, there's also the insurance agents scattered throughout the state to serve Nebraskans, and there's potential for growth there as well. So the outlook for insurance is a little more positive. We expect to have a employment of about 74,600 when everything is finalized for 2017. And the financial sector, which includes insurance as well as banking, should add about 2,100 jobs over the next 3 years. So I think the bottom line is the outlook is a little more positive for insurance than it is for transportation in Nebraska over the next 3 years. So those of you who went with insurance, I see that was a slight majority, 53%, I think are on the right track. Okay, well, we've talked about the key sectors. You can see it's kind of a mixed bag, not enormous strength in our key sectors, but an expectation that we can have at least slow growth. So that means we're curious, hey, are we going to see stronger growth in some of the other sectors of the economy? And I think there's some pretty good news about that. So let's focus first on goods producing, construction, and manufacturing. We do think there'll be growth in construction employment in the state. Residential and commercial construction activity should be strong in Omaha and Lincoln, perhaps not quite as strong in rural areas, again, with slow growth in farm incomes, lower levels of farm incomes, maybe not as much construction activity related to agriculture. However, some of our rural communities have really been emphasizing growing their workforce housing, taking steps to encourage investment in spec housing in some of our cities and towns in rural Nebraska. So there could be some growth related to that. I'll give you a specific construction forecast in a minute. Manufacturing, also some potential for growth there in terms of jobs. There's good conditions for growth in the ag processing sector. These more reasonable or moderate crop prices, livestock prices, could encourage further investment in ag processing, and the size of our crop continues to grow due to rising yields. So those two things are good for ag processing, a big part of the manufacturing sector here in Nebraska, especially if you think about animal slaughtering plants. We have a big new investment coming in the poultry industry to our state as an example of that. However, some of the other parts of the manufacturing sector will be a little bit under pressure with those lower farm incomes. Purchases of ag implements might improve somewhat, but there could continue to be some pressure on that part of the industry. And, the last part is we don't have a big sort of non-ag machine tool sector in Nebraska. So to the extent that the U.S. Manufacturing sector will grow due to this improvement in business investment, we may benefit less from that here in the state of Nebraska. So more of a mixed outlook for manufacturing employment. If we look at construction, we expect to add about 4,000 jobs over the next few years. So that'll be a good source of growth for our state economy. With manufacturing, we think we can add about 1,100 jobs with, again, ag processing growing, but some of the durable manufacturing industries struggling over the next 3 years. Let's ask our second and last poll question. Will Nebraska real per capita income increase, decrease, or during our forecast period, 2018 to 2020? So we know that some of our key industries will only grow slowly, whether that's transportation or agriculture, and perhaps manufacturing as well. But we know there's a stronger outlook in finance, insurance, and banking, as well as for the construction sector. We're going to talk about some other sectors, services and state and local government employment in a minute. But with kind of this mixed picture, at least so far, for job growth, do you think real per capita income per person after adjusting for inflation will increase, decrease, or stay the same over the next few years. So go ahead and make your poll response, your prediction, and we'll have some data on that in a few slides further down in our PowerPoint presentation. So yes, let's talk about services and state and local government employment. Those are two sectors with a lot of employment in our state's economy. Services, it's a very broad sector, includes healthcare, it includes business services like accounting, consulting, architecture and engineering, legal firms. It includes leisure and hospitality, restaurants, and so forth, and includes personal services like barbers and so forth. So it's a very broad sector, includes a lot of high wage employment, but also a lot of lower wage employment. About 40% of employment in Nebraska is in the service sector currently, and we're expecting continued stronger growth in services. The business and professional services sector will continue to grow at a good clip. We're expecting continued strength in leisure and hospitality, so restaurants, hospitality businesses in general. Arts, entertainment, and recreation is in there as well. That could be growing in the high between 1.5 and 2% over the next few years. So solid job growth in that sector. We would also expect solid growth in healthcare given rising population, the aging of the population, and so forth. However, that sector might be slowed a little bit by hospital consolidation in our state. So the bottom line is we expect strong growth in services, especially leisure and hospitality and professional services, and decent but not rapid growth in healthcare employment. State and local government, obviously growth might be limited somewhat due to ongoing state budget issues. We'll talk about that as well. So here's our outlook for services. Again, that very broad service sector. We're expecting to add about 21,000 new jobs over the next 3 years in the services sector. The services sector will account for half of the job growth in the Nebraska economy over the next 3 years. State and local government employment growth will be a little more muted, just 2,300 jobs added between 2017 and 2020. Again, with the state budget under pressure, be limited growth in state employment, especially in 2018. And of course, part of what the state spends its money on is local schools. And so there might be some pressure on that sector as well in 2018. However, we think growth can pick up a little bit in 2019 and 2020 with state and local government employment growing by about 0.5% in those years, which is less than our expected rate of population growth in the state. So given current conditions, we're not expecting strong growth in government employment. Although there will be some growth in federal government employment in the year 2020 related to conducting the decennial census here in Nebraska and around the country. Okay, so what's the bottom line for non-farm employment? Despite these areas of weaknesses, we think that the Nebraska non-farm job growth rate can actually match our expected U.S. job growth rate over the next 3 years by and large. Now, we do expect Nebraska to lag the U.S. rate slightly in 2018. That's not due to anything wrong with the Nebraska economy, but just due to the fact that if you look at the U.S. as a whole, there are regions of the country that still have some underutilized labor out there, and that allows the U.S. employment to grow a little faster than here in Nebraska. But after that, we think Nebraska can match the U.S. job growth rate. So here's our specific forecast. 1.1% job growth, about 11,000 jobs in 2018, a little bit faster job growth in 2019. And our outlook for 2019 is stronger than in our June forecast, going up from about 1% to 1.2% in terms of job growth. And our initial forecast for 2012 suggests job growth will continue at a 1.1% rate in 2020 as well. So a decent outlook for job growth here in our state. Obviously, getting to our poll question, that creates a positive environment for real per capita income growth. And indeed, we are expecting growth in real per capita income over the next 3 years. We expect Nebraska population growth will grow at a solid rate, a little slower than the nation. We still lose a few more people to other states than we gain from other states, but we have a higher birth rate in our state, and we benefit from international migration at a decent pace. So we think our population growth will be pretty strong. Real per capita income will grow, partly due to rising real hourly wages, and half due to the fact that Nebraskans who have a taste for work will raise their labor force participation rate, their second job holding rate, and work more hours as well. Okay, so here's our specific forecast. You can see nominal, so before adjusting for inflation, we think non-farm income can grow at about 4% per year, a little faster in 2019 because of the faster job growth in that year. Now, if you look at our outlook for prices for inflation over the next 3 years, we're expecting that to be a bit below 2%, and population growth at about 0.7%. So if you add together CPI and population growth and subtract that from non-farm personal income, you get our predicted growth rate for real per capita income. And you can see it's going to be around 1.5% over the next 3 years. So we're expecting real growth in per capita personal income. I see that's what most of you participating in the webinar had anticipated. About 4 out of 5 expected an increase. And of course, that's what ultimately underpins our self-sustaining economic recovery here in Nebraska, that the private sector, through growing real incomes on a per-person basis, will be able to expand. Now, we also have our outlook for taxable sales. We think taxable sales can be a little bit above personal income growth in 2018 because we're going to get a little bit of a recovery in farm incomes. That's a positive for taxable sales. But going forward after that, we're expecting taxable sales will be a little bit below personal income growth. And the reasons for that are, we're having, we still have some online sales that are not subject to sales tax. And then also as consumers, as households spend a larger share of their income on services which are not subject to sales tax, for example, healthcare services, that's another reason taxable sales tend to grow a little slower than personal income. Okay, those are the main points we wanted to cover here about our webinar, or about our economic outlook. The actual economic forecast report is available on our website, bbr.unl.edu, under the Business in Nebraska section. You can also click to that here on the webinar, I believe, if you look in the chat window. So please go ahead and get your full report. At this point, I'd like to go ahead and open the question window and answer any questions that you have. I cannot see that window. Okay, the first question. Will farm prices of 2011 through 2013 ever return, and what factors would bring them back? Well, I think that the current farm prices that we're experiencing are a little closer to sort of our typical long-run price, or are closer to our typical long-run price than those prices we saw in 2011 and 2013. So I think in most years we will not be seeing prices like that, the vast majority of years in the future. Now, we could have selected years where those much higher prices return. There are some factors that tend to drive up prices for Nebraska agricultural commodities. We do have a growing global middle class, and that creates new return for protein, for meat. In some cases, we export beef and other meat products around the globe to meet that growing global demand. In other cases, we ship corn and distillers grain to other countries, and they raise the animals there locally. So that's a positive for prices and could underpin stronger prices in the future. Obviously, if the value of the US dollar falls because global economies are growing more quickly, that would also raise the value of US agricultural exports in terms of dollars, and can also lead to higher farm prices. But Absent a drought in certain parts of the world that doesn't affect Nebraska as much, I don't think we can get back to those 2011 and 2013 prices. There will be years in the future where circumstances will align and push up those prices, but I think the prices we have now are more typical of what will be seen in the future. Second question, where do the jobs in producer, services, IT, and computer-related fit in the bigger picture? Well, those are key jobs for the Nebraska economy. So producer services, information technology, computers, but also accounting firms, architecture and engineering firms, law firms, consulting firms in general. These high-skill job opportunities are growing quickly around the country, and we've seen some growth here in Nebraska as well. So that producer services sector, computers for sure, IT for sure, but also the broader group of sectors that I mentioned really are the fastest growing high wage part of the economy. We've seen that Nebraska is benefiting from that growth, but we've also shown in previous webinars that Nebraska has about 30% less of its employment in that high wage producer services sector. And we don't seem to be closing the gap, at least not recently. So that is an avenue for growth in our economy. We expect growth in that high wage sector over the next 3 years, but our state could grow faster, could grow wealthier, could grow tax revenues faster if we could have more success in IT and other parts of the producer services industry. Tim asks, will small interest rate increases affect the forecast substantially? We are anticipating modest increases in interest rates, especially short-term interest rates, due to Federal Reserve Bank policy, and there might be some increase in long-term interest rates in the coming years as the economy expands and as the Fed starts to sell some of the bonds that it's accumulated, but we're not expecting a big shift there. So no, modest increases in interest rates would not derail the forecast we've presented. We're expecting some of that. Another question was, is this a more positive forecast than recently in the council? Yes, it's somewhat more positive, certainly for the year 2019, a little bit more positive for next year as well. So we think the U.S. economy will grow more quickly. Again, faster growth in Europe and Asia. We think some of the good policy ideas out there will be implemented, deregulation and tax reform, and some tax cuts, and we'll get relatively little of the poor policy ideas such as reducing legal immigration and restricting trade. And so we'll have faster U.S. economic growth, which will be reflected with faster growth here in Nebraska. Modestly faster, somewhat faster. And again, that's also aided by kind of the stabilization and perhaps slow improvement. We're expecting some slow improvement in farm income. So yes, a somewhat more positive outlook. Another question. Will Nebraska's slow population growth have a larger impact on the economy past 2020 due to the obvious effects on the growth in the labor supply, the growth in private sector income, and so forth? I think it'll continue to have a somewhat negative effect on the economy. Again, in recent years, our population growth in Nebraska has continued to be below the U.S. population growth, but we have closed the gap somewhat, perhaps just 0.1 or 0.2% below the national growth rate. Again, we do still continue to struggle losing more people moving away to other states than move from other states here in Nebraska, but we do have higher birth rates in the state, and in recent years, we've been gathering a larger share of international immigration. And, that's one opportunity Nebraska has. Some states around the country have become less welcoming to international immigrants. In Nebraska, we could generate an advantage in attracting more population if we remain and become even more welcoming for international immigrants than we are. that might be a way to improve our relative population growth. Obviously, we need to keep working on our competition with other states for domestic labor as well, and try to retain more people here in Nebraska and attract more people from other states. But we're expecting that to be a modest negative for our state after 2020, something we definitely need to continue to work on. You mentioned another question. You mentioned, please keep sending questions if you like. You mentioned that commodity prices will stabilize, but if there is any chance of a price decline, will there be more demand for insurance policies by farmers? There is a risk of price decline. I do expect farmers will continue to purchase insurance. Because of federal support, that insurance is available at a very favorable rate. And so we do expect continued interest in crop insurance, and that'll continue to benefit our farmers. We're just not sure the payments will be as large going forward because, again, prices have now been more moderate for several years, which influences the benefits available from those policies. If there's any more questions, we'll wait a moment and see. While we wait, again, if you're not already doing so, we encourage you to connect with the BBR, follow us on social media through LinkedIn, Facebook, and Twitter, and that contact information is available on your screen. You can also subscribe to our email newsletters, which come out several times a month. Just send us your preferred email address at bbr@unl.edu. We'll send you those emails with a link to our latest research and information about the Nebraska economy and global economy. And of course, if you're too busy to read it, you just don't have to open the link at any particular moment. But those newsletters would come to you on a regular basis. I see we do have one more question. So is this the new normal for farm prices? I would say yes. I do expect that farm prices that we're currently experiencing are closer to the new normal, and in most years, we'll see farm prices similar to what we see this year. There will be the occasional year where, due to a variety of factors, sometimes weather in other parts of the country, or even in this part of the country, weather in other parts of the world, where we could see a spike in prices and higher profitability for a year or two. But the prices we're seeing now, I think, are closer, perhaps a little depressed, but closer to the normal that we'll see going forward. There's another question. What additional risks do you see for the national and state economy, short and medium term? Well, I think the biggest risk would be some of those potential, there's always risk of a global recession due to perhaps a war of some kind, or something that causes a spike in energy prices. That's always a risk. That said, I think our biggest risks are on the policy side. Again, there's been a lot of good policies that the Trump administration has brought along that are beneficial to the economy in terms of deregulation and tax reform. However, there's also been some suggested policies that would be negative for the economy in terms of restricting legal immigration, in terms of rolling back some of the expansion of free trade we've seen over the last few decades. I think those things could potentially harm economic growth in the short and medium term and cause our annual economic growth rates to fall rather than rise. But we're expecting them to rise. We're expecting mostly to get positive policies and less of the negative policies. Well, thank you so much for participating, and great questions that folks have asked. We certainly appreciate your participation. Let me say thanks again. We hope you'll join us in the spring spring semester, I should say, for webinars. We'll have webinars starting in February, running through June of next year. And as that schedule is available, we'll of course let you know. So thank you so much for your time.